Welcome to episode 8, guys. In this video we're going to talk about something very important, journaling. I know in every video I say it's very important, but that's just because I'm explaining all the basics, and all the basics are very important. Journaling makes a difference between being a trader and being a long-term professional, consistent, profitable trader. Many people journal because someone told them to, or because they feel like it gives them like a false sense of freedom, a false sense of security, that they feel like, okay, I'm doing it, that can't be the problem, I do this, so that's not the reason I'm failing. But it is. This video we're going to talk about why it's important, how to do it properly, and I'll show, as you already see on the screen, how I do it. If you're watching this series and you're not trading yet, you don't have to copy this or make one yourselves already. Just keep this in mind and know when you start trading that you have to keep track of your trades and start journaling. So journaling is very simple. You just keep track of your trades. So for example, if you took a trade, you journal it, you fill in everything, and of course you don't have to do it exactly as me, of course not. Everyone has a different style, but don't just say, I took this trade for, today, this was my profit and loss on this coin, for example Bitcoin, or on this forex currency pair or whatever, and this is the result. That's more of a financial spreadsheet that does your exchange with your broker. You can see your balance on that as well. You have to include what type of trade, maybe a picture of your trade is very useful, why you took the trade, what went well and what went bad. It shows what you're actually doing and not what you think you're doing in your head, because maybe in your head you think my strategy is working, I do this properly, but then when you cool down, after a while you look at your journaling, at your logs, you see that maybe, okay, what am I doing? And then you're less biased than when you're emotional or watching the chart in the moment, and you're less emotional and you can think properly. So in my opinion, and I know this is something very unpopular, but journaling is way more useful than backtesting. You see those people backtesting, oh, during the weekends when markets are closed, we're going to backtest for hours. Backtesting means basically that you go onto the charts and replay to another moment and just act like the market is moving right now and see what trades you took. And then of course, because it happened in the past, you can just skip till the trade ends, so you immediately know what happened, without losing money, without being in a trade actually. For me that is useful, you can do it, but it's boring, it takes a while, and for me it doesn't have that emotional aspect, because you're not losing money, you're not gaining money, so you just think, oh, this suits my trading strategy, let me just take the trade. Journaling is way more interesting. Journaling is way better because you're not backtesting against the market, which you're doing if you backtest. You're backtesting against yourself. And who needs to improve? Of course, your strategy needs to improve. But for me personally, what do I gain when I just look at the market and say, I would have took this trade, or nah, this trade, oh okay, I took it, we won, we lost. While if you look at your own trades and you see your mistakes, learn from yourself and not from your strategy, which is very important, because every trader has their own downside points. For example, some trader maybe looks too much at one type of setup, the other trader is looking too much at shorts, while their hit rate for longs is way higher. Such things like this, you can all see that by proper journaling. So what you see on the screen is my journal. I didn't have my actual journal, I just copied it and I kept one example. So for example, you have just your basic rules for your trading strategy, your trading profile. I risk 1 to 2%, the risk to reward ratio has to be 3 or more, and that was my starting balance when I started back then. And then here I have 2 links to position calculators, but you already saw it in the last video. But I just have it nice to have it here, because when I trade I have this sheet open and the exchange and TradingView, and then I can instantly click to position calculator. Total P&L and total growth, and of course these you can perfectly set this if you use Google Spreadsheets, for example. You can easily do this with some formulas or functions that it automatically calculates it, but that's not for this video. It's very simple, you can look it up, look on YouTube, ask ChatGPT, etc. So very important, your balance before, the pair you trade is very important, the type, of course, long or short, your risk to reward ratio, and your balance after, and then you can also fill in everything, but I set it that the spreadsheet automatically calculates my P&L and my percentage grown. Then the type of setup, this is a bit different for everyone, it just has to make sense to you. For example, reversal, in the server actually explained there are 3 types of reversals, and I know reversal 1 is that type of reversal. So then I can see, for example, after 10 trades I took 3 reversal 1 setups, so I know this type of setup. For example, I lost all 3 of them, then after looking back to it, I maybe shouldn't be taking any more of these setups because my hit rate is just not there. And then the setup, of course, and that's a picture to your TradingView. This is maybe still the most important thing, because you won't remember it. Maybe you see, oh yeah, the setup on Bitcoin, I'll remember it. You won't remember it. Surely not after 50 or 100 trades, trust me, you won't remember it. So something like this is very important to show the setup you took, and of course the outcome as well. And now what went good and bad. For example, I typed it in Dutch here because I'm Dutch, but what I yeah, wrote here was we were in mid-range, and it's a volatile altcoin. As you see, it was ZIG, I believe, ZKUSDT. Yeah, it's a volatile coin, and we were mid-range, so it was not smart to play the probability there. Should have did it down here or somewhere. So that was what I did bad. And then the last one also in Dutch, but be careful with a falling knife. That's, yeah, something in Dutch. I meant more like price was just dumping, showing no strength. And yeah, I just bet on, I entered basically thinking that price would go up again without any confirmation, which is of course possible. Sometimes we trade without confirmation, but that was just not smart to do in this range. So that's something to know, because for example with reversal type 1 you trade with no confirmation, and maybe if I after 50 trades have 10 trades of a reversal 1 type trade, and I only win one of the 10, then I know maybe playing without confirmation is not for me. Maybe someone else is playing, has a hit rate of 70% on these setups, but when he plays with confirmation he has only 20% hit rate. And that's the importance of journaling, and that's yeah, after 50 or 100 trades, when you analyze everything, you see your trading profile. Maybe you're better on this, worse on that, then just adapt to it. And so that was basically journaling and my example. Some people have way more, some people have way less. I just think I have all the essentials. You can have more, of course, but I don't think I have anything that's unnecessary. The pair is important, the type R maybe isn't that important, but I still want to include that, because yeah, then you can see which RRs. For example, sometimes I trade with a high R, 5, 6, not that much, but sometimes I do, and then I can see after analyzing it. For example, these setups, I don't really hit them, so stop doing them. And of course the type, of course if you have a strategy that's only one type of trading, it's not really necessary. The setup, very important, what went good, what went bad. Maybe you can also include there, I didn't do this for that one, why I wanted to take the trade. So my analysis, my why did I want to take the trade before entering, and then the lesson of course is very important. So one more example of how journaling improves your trading journey. After 50 trades you start analyzing. You took 30 longs and 20 shorts. 30 longs you had a hit rate of 80%, which is amazing. On your 20 shorts you had a hit rate of 30%, which is not that good. If you trade with an R of 3 or more, you're still profitable, but that doesn't matter. You have a hit rate of 80% and 30%. Then you see after analyzing, I'm more type of guy that longs, my hit rate with longs is way higher. So you can either analyze your shorts and start improving that, or you can just say, no, I'm just going to long more. I can still take shorts, but for example, the next 50 trades, I want 40 to be longs and 10 to be shorts. Of course, you can also say I want to improve the shorts, I want to be overall trader if you look at your stats or anything, but it's all about making money in the end. So if you're more profitable on longs, just take more longs. Journaling also creates confidence and clarity, as mentioned in a risk management video as well. When you calculate your position, when you calculate your risk, you have rest. Maybe it's boring for people because you're just emotionally, you know everything on forehand, there's nothing unexpected to happen, but if you want that, you can go to the casino, then trading is nothing for you. But there is rest, your emotions are down, you have nothing to be angry about, you have nothing to be happy about. Not in that sense, of course, but you have no euphoria after the charge or seeing, oh, I'm losing thousands of dollars. You know everything, and here everything is clear, and that makes profitable traders profitable, and that keeps unprofitable traders unprofitable. So even though if you're unexperienced with making Google spreadsheets, Excels, whatever, this is really easy to make, very, very easy. If not, you can also do it on Word. I like people do it on paper as well. You do you. The thing is, if you do it online or something like this, you can calculate it better, as in, for example, if I have 50 trades, I can set something in like a function that says, oh, you took so many shorts, so many longs, and this was your hit rate. Well, if you do it on paper, you have to do it yourself, but it's the same thing, just whatever you prefer. So what you need to remember, you're probably not trading yet, so journaling is not what you need to do right now. Just keep it in the back of your mind. You may forget it because this is something boring, as people say, but it's very important, and people will surely in our community say it when you're trading. Are you journaling? Did you set this trade in your journal? Because it's very important. One last thing before you guys think journaling is the only thing I do. Journaling will save you a lot of time in your trading journey. from becoming, from starting being a trader to becoming consistently profitable if you journal properly. And I know it might be boring. For me, it's personally not even boring because I like statistics. I like these stats. I think, oh, this is my hit rate on those types of trades. This is my hit rate on those types of trades. I like those statistics. If you don't like it, it might be a bit boring, but trust me, it will save you months, if not years. If you don't journal, you're not going to make it that far because you are not learning from your mistakes, basically. So to end, journaling is not optional. You need to journal to be a profitable trader. And those who say otherwise are probably just starting out or have hit one lucky trade and are known millionaires, whatever. Surely with PA trading, where you have several types of trades, you need to journal to see which types of trades, long, shorts, which pair, which currency suits you more. So maybe again a more boring video, not too much to do, but something very important once again. And I'll see you guys in the next video.